Hi everyone, this is going to be a really sad video. I've decided just to sell my entire stock portfolio. I just think with the new influenza that we're going to call the C19, because every day there's a new PC version of wannabe calling it going around, there's just really no point in thinking about the future, and I just want to live for right now. And as a result, I'm just going to be selling my Apple stock. Really, who's going to be using their iPhones or MacBook laptops anymore? When we're all going to be quarantined, we don't really have time to be looking at our Apple Watches. I mean, we're all going to die soon. No need to be wearing AirPods because we can just blast music, one last time all together. So time to put in a limit order to sell all my shares. It's been a good run here on YouTube, but it's going to come to an end here, guys. Wait, what's that? The death rate of the new influenza is not that much higher than that of the regular flu? That the reason why there's more reported cases of the C19 virus is because there's more test kits available? So therefore, people that have already been sick are now being diagnosed when they were already in fact infected? That even if you're older than 80, you have an 85% chance of surviving, which only gets significantly lower the younger you are? If you're between the ages of 10 to 39, you have just a 0.2% mortality rate. So it seems like this is the usual media fear-mongering. Remember, fear sells, guys. Headlines, clicks. I saw a headline that says the C19 virus was expected to visit the US soon, as if this was some sort of celebrity on tour just making their way around town. Now, I was actually surprised that stocks hadn't sold off more when the C19 was first announced. I mean, you basically had the world's second largest economy closing down major cities, and billions of people were fearful to go outside. Now, I know I may be talking in a joking manner, and this is a very serious topic, so my thoughts and prayers are with all these people that are dealing with this illness. And, luckily here in the US, there's a lot less chance of us being infected with this. But really, I'm just surprised that, it's taken this long for people to react. I mean, Starbucks announced that stores were going to be closed last month. Like, that is the worst thing that can happen to a company, is not even having an opportunity to generate sales. So while I'm not surprised that the markets are down, I am surprised about how fast that this has happened. I mean, look, just in the past week, I'm down $2,000 and almost 10%. That's basically a correction within just a week. And I certainly would have thought it would have taken a bit longer as companies just report bad earnings for Q1. And while the market gains over the last 2 years are basically now gone, those sweet dividends that I have are forever. So I'm still getting paid every few days from companies putting money into my pockets. That's why I really love dividend companies. Predicting capital appreciation is really hard to do, but dividends for the most part are very consistent and easy to predict. We're just gonna have to go over the portfolio and see how it's been doing. This latest dip in the market has stocks at prices I never thought I would see again. They have amazing starting yields. And as Warren Buffett recently said in his 2-hour-long interview, you have to invest in great companies that are going to be around 20 years from now and still going to continue to return shareholder value. Do you really think that we're going to be worried about the C19 virus even a year from now? I really don't think so. It just still seems to me that every couple of years there's a new virus or influenza that's going around and everybody fearmongers and starts to panic. Really, this gives opportunities for stocks such as Shell, which is trading at nearly a 9% dividend yield. So Robinhood has been a little bit better at updating these stats, but I checked today, Shell is trading near a 9% starting yield. That is just amazing. I feel like we're on punked. I mean, I'm just expecting these cameras to come out of nowhere. Now, Shell has not missed a dividend payment since World War II, and I don't see any reason why this company can't continue that streak. For those worried about the declining dependence on fossil fuels, Shell is on top of that. They have Shell recharge stations for EV cars that use 100% renewable energy. Plus, it's penetrating emerging markets with new businesses in China, India, Mexico, and Russia. Certainly, Shell should be able to transition to whatever direction we head toward in terms of energy. They're one of the largest European companies, so I really don't see them going down anytime soon. since they are such an integral part of Europe's economy. Shell now provides 100% of renewable power to 4% of all UK households. And it's acquiring a major solar power installer in Australia. Getting it at these prices is just too big of a steal for me to pass off. Same thing happens with its rival here, ExxonMobil, trading at over a 7% dividend yield now. Really like where these companies are trading at, and definitely think they are at bargain prices here. You got to be greedy when others are fearful. So definitely a buying opportunity I see here with these two oil companies. So I'm just going to quickly go over the stock portfolio, basically seeing how some of these stocks have been doing in the last week. If you guys see buying opportunities, let me know in the comments below, and I will hopefully be able to highlight on them. As always, if you guys enjoy this content, be sure to hit that subscribe button and smash that like button. It really helps me know that you guys like this type of content. These type of videos haven't been doing as hot as recently, so I don't know if you guys want me to continue to make these videos. So the best way to show that feedback is to either hit that like button or let me know in the comments. So going down here, we have Applied Materials. You can see here in the past week, they're down 7%. Looks like the semiconductor companies have been hit pretty hard here. They do a lot of business in China, whether that's producing or manufacturing there and then selling in the US. There's obviously going to be a rippling effect of whatever is going on across the world, but I think this is a great opportunity to continue to dollar cost average into these positions. As you can see, Nvidia is up a little bit today, but it's had a pretty rough past week here. At one point it was trading at 300 mark, and then to see it fall this much so quickly is pretty amazing. But still up on this position, bought it at pretty good prices, and still expect the company to do well into the future. Then we got the healthcare stocks here. We got Medtronic, which I do have the superpower that as soon as I buy a stock, it goes just off the rails. So you can see here, my very first position, I believe, was at 120, or 2 shares at 118, and then ever since then, it has just continued to fall. So in the last week, it's down 12%. Basically, ever since I bought it, just continues to fall. But if you guys haven't checked out my video where I do an animated video analysis on Medtronic, I really like this company for the foreseeable future. 42 straight years of increased dividends, and it's a very important part in the healthcare field, making medical devices and equipment. I really see this as an opportunity to continue to buy into this company. AbbVie also down here, but still has that amazing dividend yield of 5%. There's been a lot of amazing opportunities to buy into this company at various points in the last year, and really would be rewarded well with both capital appreciation and dividends. Best of both worlds there. Pfizer, this was been one that's been hit really hard here. Last week down 6.5%. Last month it's down 16%. Last 3 months down 15%. So I've been trying to dollar cost average my way down here. So you can see analysts are really split with this one, but has been continuing to pay me those dividends. This is one of the largest companies in the world, so I don't see them being insolvent anytime soon. Johnson & Johnson, another great company. Glad to see that it's down here. I really have been having my eye on it and want to get in more at these prices. Coming back down to a fair valuation here. $381 billion market cap. I'm still up on this position, which is surprising, but I've had some good buy-in opportunities and will continue to do so. Having Johnson & Johnson at only 2% of my portfolio almost seems like a crime. I need to definitely add onto that position. So UNH is the first one I really wanted to talk about more here today. This is a very interesting stock. As you can see, this has been a very volatile company, and that's because of everything that's been happening in the political landscape here. So they are actually one of the largest players in the Medicare Advantage market, which has almost a market size of nearly $1 trillion, and nearly 10,000 baby boomers age into Medicare every single day. With the Sanders campaign picking up wins left and right here in the primaries, I do expect a strong performance from him on Super Tuesday as well. So that's only going to increase his chances of winning that Democratic nomination, although there has been talks about the superdelegates in his own party voting against him. So we'll have to continue. It's not a done deal yet that it'll be Trump versus Sanders, but I do see why there's a lot of hesitation to buy this stock. But the numbers, the fundamentals on this company are just so great. It's really, you're really betting on a red wave come this November. I would say that even looking at Wall Street speculation and looking at just like Vegas odds of the election, these guys don't have political agendas. They really just want to make money. I really don't see Sanders being able to beat Trump. So I guess, I'm really just betting on that red wave come here November. So I do think I'm going to be buying into more UNH. And now it does have revenues of $285 billion in 2019. That is larger than the entire GDP of Austria, Norway, and Israel. So UNH covers 43 million people in the US and nearly 6 million people internationally for healthcare coverage. So people are going to continue to get sick, whether that's in recessions, whether they have accidents, they're going to need health insurance. And, regardless of how the economy is doing, companies like UNH should continue to strive to do well. I also want to mention that healthcare reform, that's not something new that's exclusive to the 2020 presidential race. This is something that's been talked about on both sides for decades with really no avail. I mean, I can't really say that the healthcare landscape, to me, at least in my young life, has not changed much, but, we never know what tomorrow might bring or who the next candidate and their ideas might be. So I'm just going to continue investing in great companies. UNH has aggressively been raising that dividend, and it's also been buying back shares like crazy. So it really rewards the shareholder, as you can see in the last 5 years, up to 124%. And let's keep going down the stocks here. We got MasterCard. Card disclosed that the C19 virus will cut 2 to 3% of its Q1 revenue growth. Now, the timing of this announcement was terrible because literally just minutes before that, I had bought another share thinking I got in at a great price around that 324 mark here. And then right when they announced that, the stock basically fell another 5%. So still obviously a great company, great fundamentals. I just bought it at the worst time. Literally just moments after I bought it, they announced that cut in its Q1 revenue growth. So certainly was not expecting MasterCard to make that announcement, and I did not see the stock tanking that much. I mean, their CEO is also stepping down, and he's done a phenomenal job running this company, and I still expect this company to continue to grow very well into the future. Regardless of what's happening in the world, I still expect people to be swiping their cards. Just like I expect Visa to be doing well here. In the last week, it's down 10%. So these are very high quality companies that are experiencing downturns as well. Certainly, if you've had your eye on these stocks, I really am intrigued to open more positions on them. Microsoft is the largest company in the world, though trillions of dollars of market cap across the entire stock market have been lost here. So as you can see in the last week, down 6%, but still have very nice gains here. 38% I'm up on Microsoft, and will continue to buy into this company as long as I can continue to invest in them. Intel, this is a company that had a really big runoff here. As you can see in the last 3 months, after a great earnings report, shot up to $68, now back to $54, but we'll be holding on to them for the long term. Now, McDonald's is another interesting company. Now, this graph won't represent it, but they did very well during the last recession in 2008, 2009. And that's because their products are so affordable for all classes. I mean, whether you're rich, poor, middle class, you can afford McDonald's, and you're really just stopping there for a quick bite, quick coffee. Almost said coffee. But anyway, McDonald's, I expect them to do very well here going forward. They run a very nice business model of both real estate and fast food sales. Starbucks, now I'm actually shocked that this stock hasn't just shot down even more. Really, if you're having stores being basically quarantined off, you're not making any money, but probably still having to pay a lot of those expenses. So I do want to buy more into this position, but I do expect it to fall more. Pepsi and General Mills here. I do actually, a very important announcement, I do now buy General Mills cereal. You guys know I love those Cocoa Pebbles, which are made by Post, and Special K, which is obviously made by Kellogg's. But now I've been eating those Reese's Puffs, which are made by General Mills. And they are down 10% in the last week. But great company here again. Pepsi, similar boat. so diversified in all their products. I don't expect these companies to be doing too bad here whenever the next recession is. Then we have our real estate companies here with Medical Properties Trust, Equinix here, still phenomenal returns on this company. The data center company here, and Medical Properties Trust is a hybrid of real estate and healthcare fields. Then we have O Reality or Realty Income, regardless of how you want to pronounce it. It's down 13% here. Basically, O announced that they were going to be pricing 9 million shares of common stock to be offered. So that's obviously going to dilute the amount of shares. And as a result, everybody's overall shares are going to be worth less if there's more of them out there. But still going to be a great company to own in the future. It is really nice to get those monthly dividends that just will continue to go up for the foreseeable future. Now, Store, this is another one I really wanted to talk about. This is one that has just fell way too much for me. I definitely feel like this one just has been really oversold here. Last 3 months, it's down 20%. But Store, for you guys that don't know, is the only REIT that Warren Buffett actually owns. Since its IPO in 2014, it has an average rate of return of about 20%, which is better than both the market as well as the REIT market in general. Now, it has 2,504 properties leased to 478 different customers. And it also has an outstanding 99.5% occupancy rate. It also has 99% of its portfolio subject to triple net leases. For those of you guys who don't know what that means, that basically means that all of the responsibility is put on those tenants to pay for property taxes, building insurance, maintenance. Store is not responsible for that. It's up to the tenant to take care of all that. Now, I really like the tenants that Store has because it's not just retail. There's restaurants, there's fast food, there's health clubs, movie theaters, medical offices, mechanics. Tell me the next time that Amazon's somehow going to repair your car or get you to go to the gym from your living room. And these are all places that technology really won't be able to disrupt. So I really think that this was sold off a little bit too much here. So I probably will be buying some shares of them. Then we have NRZ, high dividend yielder there. JP Morgan and Bank of America. Now, these two Ponzi schemes, banks, they don't really need to be worried about anything. I mean, there's always us to bail them out if anything goes wrong. They're down about 15% here in the last month and 13% in the last week. So it'll be interesting to see them and how they fare during the next down time here. But Disney, this is another one that I was surprised that was sold off so much here, 16% in the last month. Now, they transferred their CEO duties from one Bob to another Bob. Now, let's all be honest, this is all short-term news in terms of why it's going down. People obviously aren't going to be traveling as much. They're not going to be out vacationing next to thousands of other people's when there's this new C-19 virus going around. But this is really just as short-term as you can get. Once this whole scare goes away, people are going to go back to spending thousands of dollars at Disney World and their hotels and watching their Marvel movies. They're going to be watching Disney Plus, and they're going to be doing all that regardless of what Bob is the CEO of Disney. Next, we have Boeing, down $17 today. Last month, it's down 15%. So now down almost 25% on my initial investment for Boeing here. But really don't see them going away anytime soon. 3M, this is another one that's trading at a really attractive price here. As you can see, they're down 30% in the last year. And they have an amazing dividend yield, over 4% now. And, shout out to Robinhood. They do seem to be doing a better job of updating these stats. Still not 100% accurate. Also got my Robinhood debit card program going here. So I'm starting to earn interest on invested cash. So starting to get a few pennies every single day. So going to get slowly rich with those Robinhood dividends. Then we got Procter & Gamble. Last week it's down 11%. So a lot of these household items, really, people are not going to stop buying them even in bad economic conditions here. We have Southern. This was another one that probably should have corrected a while ago. I thought it had gotten way too overpriced. So glad to see some of these companies going down that really, they had really no business trading at the prices that they were trading at here. Now, FedEx, it doesn't matter what the market conditions are. This stock will continue to go down regardless. definitely one of the bigger losers in my portfolio. Thankfully, only own one share of them. My two railroad stocks, CSX hit down 11% in the last week. Then we have Union Pacific down 11% also. Was reading some of their 10K last night, and they're really involved in both the western and midwestern parts of the United States for their railroad lines. And really, that's a really hard area to disrupt. I mean, the reason why the U.S. doesn't have high-speed rail is because there's just so many logistics and the infrastructure and needed to make all that possible, and nobody really wants to give up land to railroad companies here. And they're really good at raising their dividend as well. I really see this company going strong even in the future as we probably get more autonomous vehicles. Still think there is definitely a play for railroads and think they will stand the test of time. Then we got Verizon and AT&T. Now, I don't own a lot of utility companies, so even though these aren't really utility companies, I like to think of them as such because people just every month pay their phone bills and internet bills. So Verizon still has been paying me those nice dividends. So that's really why people buy these companies, and do see a buying opportunity here with both AT&T and Verizon. Then we have Waste Management. This is another one that's been intriguing, but I still think there should be more of a correction with its price. And this is really as recession-proof as it gets. I mean, people are still going to be producing waste and trash. Chubb, I really felt like my portfolio is really not as diversified as it can be in this particular sector. So going to be adding a few more shares of this company. Then we have SPHD. Let's see if it's really as low volatility as its name would predict. And I was actually surprised it went down as much as it did this past week, down 12%. So, I mean, for the most part, it's usually pretty low volatility and high dividends. So as long as it keeps doing that, I'll continue to buy into it. But at the time, I only own 3 shares. But as you guys can see, I have consistently been getting those dividends as long as I've been holding on to this stock, and that's pretty nice and juicy. As you guys can see, it's also been slowly increasing over time as well. So I do want to add more to this position. So that's really going to do it for the video, guys. Be sure to let me know in the comments what you're buying, and we'll have to survive this, whatever is going on here with the markets together. And let's just keep making that money, making those gains, and I'm sure we're all going to be just fine. Don't forget to hit that like button and subscribe to the channel.